Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Yes Bank and large investors exiting the counter. So let's understand what has happened and why I needed to make this video just to make you aware of what is going on. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about, and this is only for educational purposes. Before I start with the analysis of what has happened with Yes Bank, I would like to request you to kindly support me through Patreon. And once you do that, it will be helpful to grow my channel, and it will also help me to have more than. And once I'll have more than 200 Patreons, I'll start with an educational course online for free on YouTube. So what has happened in Yes Bank? So one needs to understand as to what has gone on with Yes Bank. If you think that you have done a great job by buying Yes Bank shares at 20, 25, 30 rupees, then you really need to understand as to what has gone on. So major players have exited the counter, and the news has just broken in through the news networks that major investors into the Yes Bank domain have exited, and they had put money at around 10 rupees. So they had put in money at only 10 rupees a share, and now probably when the stock price was at 50, 60, 70 rupees, they have exited. I'll just give you a detail in the next slide. The stock has been in downturn ever since the selling had happened about few weeks back, and there is still some stake with large investors. So it is not to say that other major players are not there, but there is stake with other large investors, but still there have been exit by major banks who have put in money into the Yes Bank share. These large investors who are left, they may exit once the lock-in period ends. So they have some sort of a lock-in period between 2 to 3 years, and probably they'll exit then. So this all stems down to the fact that the stock may not go to their levels of 100, 120, 200 rupees very soon, or in the longer run even. Considering what has happened, so Federal Bank is one of the company that has gone on to reduce its stake. So what has happened is Federal Bank has sold around 5.86 crore shares at about, so that is about 19.6% stake. IDFC First Bank has sold around 4 crore shares, so that is around 16% stake that they have sold. And Kotak Mahindra Bank has sold around 4.7 crore shares, that is around 9.5% stake that they had put at Yes Bank. And this was sold in somewhere in March, probably mid-March, end of March, or something of that sort. And this was sold in the range of 25 to 86 rupees. Now this is interesting. On the day when it was sold, the high was around 80, 85 rupees, and the low was around 25, 29 rupees. These are not exact figures. This is somewhere near that. And I have a feeling that they must have sold either at the top or around 80 rupees or so, or around 50, 60 rupees at least. So they may have sold at middle to higher end of the range, and they have made like 5 6x profits out of the out of their investments, and which is quite handsome. They did not do anything wrong, so legally they were allowed to do that, and they did that. So they were able to sell these shares absolutely legally, and they gained a handsome sum of money out of it, 4 5 6x out of their investments. So probably that's why they decided to exit the stock at those levels. So what needs to be done, and why I am trying to make this video, and this is a quick video I was making, although I have made other videos on companies, but I wanted to just give you an idea. The problem here is that mainly retail investors like me and you and everyone think that okay, major banks have put in money, so they'll invest for the longer haul, and the company would come back to its glorious days, and so on and so forth. But with this you can say selling that has taken place with these IDFC, Kotak Bank, etc. We have understood that all these banks who have put in money, they want money back. So they want real capital at this point of time when economy is in downturn, when there is absolutely difficult chance of at least next 1 year for capital to come, for money to come into banks, because the people who have got loans from the banks, they are not able to earn because of the lockdown situation. So this is a best way that banks had understood, that to take out money and get crores of rupees from this investment and have it as cash probably, or to pay their debts, etc. So this could happen, and this could continue to happen over the next 6 months to a year. So one needs to be understood of the fact that this could be possible, and in that sense I would say that do not buy big in this counter at 20, 25, 30 rupees. If possible, completely avoid the counter at all levels, and exit on rallies. So it is not the case that you buy and then you hold on to the stock. You need to exit on rallies and play it as a trader rather than an investors. And what will happen is, after 2 years or 3 years, it will be only retailers will be left with the holding the baby. So there'll be no large investors in the stock. That is my opinion. You can take your own decision. I'm just giving you an idea. And maybe the big run in this stock is over. So maybe the big players would have gone out after 2 or 3 years, and the stock would be dwindling around 15, 20 rupees, 30 rupees. But if there is a chance for recapitalization of the bank and a major money, billions of dollars come into the bank, then it's a different ball game altogether. Otherwise, these sort of investments by banks, in which they just make money, like us, that we invest into a company, we make 40-50% and we take that money out. For them, that 4-5x is equivalent to 40-50% that we do through stock trading. So that is, I guess, what is going on. And we have to be extremely careful investing into the stock, and that's why I want to stay away from banks. Because if you look at it on a holistic basis, banks are trying to make money anywhere from wherever it is possible, because they have understood that there are going to be a lot of NPA going forward. So one needs to be extremely careful. The big run maybe is over, and you need to look at pure consumption plays if you want to make money. So this is my take on Yes Bank. There were many questions regarding Yes Bank. There were many questions regarding Federal Bank, other mid cap banks, even large cap banks. My firm opinion is avoid banks and BFCs at all levels. Even if you miss the bull run later on, you will not repent buying it if the stock goes down another 50%. So for instance, a Bajaj Finance at 2000 looks extremely attractive. What will you say if it goes to 1400? So there's a greater chance of having of that happening going forward. So to put it in a nutshell, major players are exiting Yes Bank. That shows the kind of problems, and these players are banks, large cap banks, that they might not be getting money. And it is pretty evident from the current scenario that is happening on the economic front, that they might not be getting money out in the next 2 quarters from the lenders, from the people that they have lended to. And it would be extremely difficult for them to get cash on books in the next 2 quarters. So they are trying to do this. So hence, be extremely careful while investing into the banking sector, the NBFC sectors, and especially in the housing finance and the microfinance sector, which is going to be hit the most. It is not going to be the large banks maybe at that level, because the banks have fallen a lot, but the NBFCs and the microfinance sector would be extremely badly hit. And if you are invested into it on any move in the banking sector, just sell and avoid those sectors for the time being. So this was my video on the Yes Bank and the selling that has taken place in the stock. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.